Welcome to Markets, Money, and Life with Grandich and George, our next installment and our first ever video installment live from the floor of the Cambridge Conference in Toronto. Peter, before we get into the banter that we're going to get into, to show that I'm a man of my word, as painful as this is going to be, I'm going to ask you to hold on to this mic while I live up to my end of the bargain.
George, this is a family show. What are you doing, George? This is a family show. What are you doing?
It's a family show, and I'm about to do something pretty obscene, actually.
Wow.
An authentic Peyton Manning shirt. I'm going to do this show.
Wrong team.
Eli. I'm going to do this show officially wearing the New York Giants jersey.
As hard as that must be for you. You know, George?
This is a family show, and look what I'm doing. I'm defacing the blog, but I'm going to do it regardless.
I could actually say now that you're truly a winner.
Edit out this side of the video from here on in. So, Peter, let's get straight to business. First thing, you've been talking about very strongly this week about a stock market melt up in the U.S., and you're getting really strong on that this week. So for everyone at home, why are you talking about that? And for the people who aren't aware of what a melt up means, because they're all used to meltdown, even touch on that a bit.
Well, the opposite of a meltdown, where everything just collapses pretty fast. There is potential, and it seems to be getting more stronger as potential, that for whatever reason, despite fundamentals that many believe shouldn't cause the U.S. stock market to be where it's at, it is rising and rising at a pace that could cause the bulk of the people who are not yet in the market, particularly money managers and mutual fund managers who are paid on performance and many times on a quarter-to-quarter basis, to literally have to come into the stock market despite how bearish they may be fundamentally.
So this is a situation where for a month people have been saying, I'm going to stay out of the markets because we're expecting a correction. I'm staying out of the markets because I'm expecting a correction. It hasn't happened. In fact, the markets have advanced. So now you've got worried money saying, I got to be a part of this, or I'm going to be punished by my investors for not being a part of this.
Well, what makes that even more acute is that the market had such a reversal off the March lows and ran so far so fast that a lot of people did not participate in that, even ones that were somewhat bullish. And then they kept saying, well, the market's going to have a correction, and that's when I'll step in, it hasn't happened. Justifiably or not, we can argue about that, but the bottom line is, since so much money now is based on performance, if we get through this earnings season and we find that there isn't a lot of reason to sell stocks, we're going to get through that 10,000 number, which is going to be like a magnet.
All right, so should people be participating in this? Are you telling people at home that, hey, maybe there's a short-term opportunity to buy some of the big names? Or are you saying, be careful, this is the last step, this is the last stage, we're going to have the melt up, and then we're going the other way?
For me, I'm hoping for the melt up in order to get short again. The last time I shorted the market was back in October 2007. I think if we can get fortunate that all things work, and the markets never usually work the way you want it, but if we get a melt up here, people run in the fourth quarter chasing stocks simply because they have to be in. If they're not, they're looked at in a bad way, and we can get to that 10,500 area on the Dow. I really think that could offer us an opportunity to at least sell short the market or bet on the market not going up a lot further.
And to give everyone at home a little bit of context, I've actually spoken to a couple of money managers here on the floor who have actually been relaying that exact sentiment, where they're saying, you know what, I've been staying out for a while now, and I'm starting to believe that this is for real. They're listening to the headlines that recession is over, markets are back, things aren't as bad as they are, and they're saying, I now want to put some money to work. So I think I'm seeing the practical realities of what you're theorizing. Are you still talking about 10,500, or is this melt up bigger than you're going to expect, and maybe we'll touch 11,000?
You know, who knows? But when we get there, I think when we get through to 10,000, I should say if we get through to 10,000, that'll be a lot of media focus on that. That'll really force the people that aren't in yet that they have to get in. And then it could be a quick run. You could get to 11,000, but I know in that area right now as we speak, that's an area where I've targeted since this rally that I would not turn real bearish until we got to that level.
All right, and then in your model portfolio, when that time comes, and everything that time's going to come, you're going to talk about shorting, you're possibly shorting positions, and you'll let people know the companies that you think are the most overvalued. Is it too early for you to tell which companies are the most overvalued right now, and you got to wait for that?
Too early, and a lot of the work I tend to do is probably bearish spreads, where we look at some of the S&P indexes and all, and sell the current nearest contract and buy the one in the future and try to net the difference, things like that, but it's too early.
All right, fair. Now, the second buzz on you were the keynote speaker this morning at 9 o'clock in the morning, and literally hundreds of people streamed out of that because it was a pack room, standing room only, it was a pack room, and the thing that everyone was really amazed about was the fact that you are more bullish on gold now than ever. You're hyperbull. In fact, people were talking about it. People actually came by the booth here and asked, how do I get onto the Grandich blog? How do I subscribe to it? Because I've never seen Peter so bullish on gold. So why all of a sudden it seems like you've turned it up a notch, even more so than any time in the last, even the most recent 3 weeks? What's happened that's changed your mind?
Given everything, George, I am the most bullish ever. I believe the fundamentals have never been better since I got involved in the gold market 20-something years ago. The supply-demand scenario, we just see that a big negative for gold was always central bank sales. We've just seen the Bundesbank Friday announce that they are not going to sell their allotted amount that they're allowed to within the Washington Court Agreement, which was a few world central bankers.
So they're holding.
Well, they basically said and then gave reasons for why they think gold should be an asset that they should own.
Which color? You got a couple of those reasons?
China. We don't have to look past China. China has actively talked to its citizens saying that not only are we setting up marketing programs just like the U.S. set up 401ks for people to invest in, China is setting up programs where the local citizen can go down and is encouraged to use their savings and buy gold.
Because I guess the big question for a central bank like the Germans, since we're talking about them in this example, is if you sell your gold, where do you put your money?
Yeah, well,
U.S. Treasuries, usually if you sell gold, you're going to go into Treasuries and things like that. There's no way that's an option in this day and age, and that's probably why they prefer to hold on to the gold. We assume that's part of the equation.
Well, the China has also clearly spoke with their mouth because they've not only bought into an IMF new bond versus U.S. Treasuries, they're floating their own bonds right now for the first time ever in lieu of putting their money in the U.S. market, and that's also bullish for gold. And the simple fact that selling gold forward, what was ever left of the fan club of that died with Barrick's announcement that they're no longer going to do that.
Right.
And there's just so many incredible bullish factors. And the real bullish thing is, look, George, we're almost a few dollars from its nominal high. There's no enthusiasm. The place is not packed.
There's not a.
You talk to people we've known in the business 10, 20 years who had 400 or 500 gold, used to be so happy. Now at 990, they're like almost sad. There are so many sentimental
they're focused more
and
on the
fundamental.
market being down $15 or $20 from last week, rather than the fact that they're sitting at 992.
What was a ceiling, a 4-digit gold price, will in the next 12 months become the floor.
All right, so given the fact that we're here at the Cambridge conference and we've got, 200-300 companies here that are exhibiting, let's talk about some of the companies. You're on BNN yesterday, so if you haven't watched that, look at Peter's blog post earlier on Friday and you get a link to that. Well, who do you like in gold? Because I got to figure you're really, really hunting for good gold companies right now, whether they're clients of yours or not.
Well, right now I'll just say what I said at BNN, and that is that my favorite picks was Continental Minerals. It's my largest personal shareholding, KMK on the Trump.
And what's your personal disclosure on that?
They're not a client.
Okay.
But,
so everyone should know that.
It's my largest holding. Evolving Gold, which I didn't know when I recommended they happen to have been a client of AGORACOM. We just heard a presentation from them. And a brand new company called Crescent Resources, which has land around the Evolving Gold project, the Rattlesnake project. For starters, those would be three that I would speculate in. Any
kind of companies that investors should be looking at? Should they be looking at producing companies right now that are actually producing gold and they're going to take advantage, even if it's a few thousand ounces, maybe 20, 30,000 ounces a month? Or should they be looking at those? Should they be looking at earlier stage plays? What do you prefer to look at?
Developing and into producing before pure exploration. Yeah, that's why I gave short, because I knew it was...